Hi, Jordan Perez here with GP Accounting and Tax Services. So there's 19 days left of the tax season. So if you haven't filed your 2016 tax return yet, make sure you reach out to me to schedule an appointment so we can go ahead and file your return. So today we'll be going over 3 items. The first item is how to actually calculate the tax due based off your taxable income using the 2016 tax table. The second item is where to report your federal income tax that is withheld from your W-2 or 1099. And the third item we'll be going over is how to calculate whether or not you'll receive a refund or you actually owe tax to the IRS. So just jumping right into it. Here is an example of a single individual that has taxable income of $91,150, and we'll be calculating the tax using the tax table. So the way the tax table works is it divides your taxable income into different segments, and it taxes each segment at its own tax rate. So here, this individual makes $91,150. So the first segment that the tax table calculates is between $1 and $9,275, and that's taxed at 10%. So the first portion of the tax on the first portion of his taxable income is $927.50. Next is a 15% tax rate, and that amount is multiplied by the amount of money between $9,275 and $37,650. So that portion of income is taxed at 15%, and that total is $4,256.25. Next is the 25% tax rate, and the portion of his taxable income that is taxed at a 25% rate is the portion between $37,650 and $91,150. So $91,150 is the end of the 25% tax bracket for single individuals. We just selected this number to make the example somewhat straightforward. And that taxable income amount is $13,375, which gives him a total tax that he is obligated to pay the IRS of $18,558.75. So jumping right into where your federal income tax withheld on your W-2 or 1099 is reported on your 1040, and that's reported on line 64. So just jumping right into number 3, this is the meat and potatoes of this video. So this is where we'll discuss where to actually calculate, how to calculate, I should say, whether or not you receive a refund or you actually owe tax to the IRS. So the first example I want to do is for an individual who makes $91,150 and who had $20,000 withheld from his W-2. So if the individual had taxable income of $91,150 and his employer withheld $20,000 of his W-2, then he'd actually receive a refund, because as we know or explained previously, his tax that he's obligated to pay the IRS is $18,558.75. However, his employer already withheld $20,000 out of his W-2. So to calculate whether or not he'll receive a refund or he'll owe tax is by taking the $20,000 that was withheld out of his W-2, subtracting the amount of tax owed or due to the IRS based off the U.S. tax table. And if you subtract the two, then the difference will actually be positive. So he'll actually receive a refund by the IRS. So now we do the same taxable income, but just saying that his employer only withheld $15,000 for the year. So if he had taxable income of $91,150, his employer withheld $15,000 from his W-2, then he'd actually owe $3,558.75. So the way that would be calculated is the difference between the $15,000 tax withheld less the tax due to the IRS of $18,588. So we actually owe $3,558 to the IRS. So the amount of tax withheld throughout the year, those are actually payments that your employer is withholding from your W-2 and remitting those tax payments to the IRS. So when you receive a refund, it's not necessarily that the IRS is giving you money back, it's just that you had overpaid in tax throughout the year. And if you owe money, that just means your employer has withheld or did not withhold enough money to cover your tax bill based off your amount of allowances that you fill out when you complete your W-4 when you're first hired by your employer. So I hope this video helped you out. I look forward to seeing you next week. Please subscribe below, and if you haven't already filed your 2016 tax return, make sure you reach out to me to schedule an appointment. Thank you and have a great night and be safe. Bye-bye.